all the courses, all the side hustles, all the businesses, none of it brought me the peace I was looking for. Collecting premium from the market, no matter what it did, that finally did it. Yo, what is going on, Premium Chasers? I hope you are having a God-blessed day. Today, every single person that comments down below is going to get the Premium Chasers Starter Kit. Perfect for those of you just getting into the strategy that you're going to be learning today, which I promise you, if you give me a few minutes here, will absolutely shift your mindset on the markets. Because when I learned this, the first thing I thought is, why did I not learn this sooner? Okay, so hit the like button, subscribe button, drop that comment, right? So I will get you that ebook completely for free. But guys, today we're talking about a strategy that allows us to collect premium from the stock market on stocks that we may already own and really leveraging them as an asset. So let's go over the shoulder and show you guys a live example of how this actually works, because I think that's going to make it the easiest for you. Okay, so first and foremost, you're going to need some sort of brokerage account. For our example here, we're just going to be using Robinhood. Okay, we're going to be using Robinhood here as our example. Now, you will need to be approved for options trading. I know. Don't please give me, just entertain me. 5 minutes. This isn't the crazy risky options buying or trading that you've probably seen on Instagram or YouTube. This is a very slow, built for real life strategy that doesn't compromise your peace. Okay. For me, as somebody with 3 kids, work, business, fitness, faith, other things that I genuinely like doing than staring in front of charts all day, fits into my lifestyle absolutely perfectly. Okay. So once you have your brokerage account, again, Robinhood, Fidelity, Schwab, they're all great. Okay. And there's, there are some that are better than others, but that's not the point of this video. Dive into the other content on the channel or click the first link in the description of today's video to get the more intricate details. Okay. But with that said, the second thing we need, right, after we have our brokerage account is a stock, right? We need a stock that, 1, we either own 100 shares of, or 2, we want to own 100 shares of. So let's use our first example, okay? Let's use if you own 100 shares of stock, because maybe if you're watching this, you do own 100 shares of stock. And let me know in the comments, do you own 100 shares of a stock or an ETF? Well, you can actually do this strategy on it. So what am I talking about? Well, what we can actually do with our 100 shares or thousands of shares is we can put them up on the market. Let me show you. Let's pretend, we'll just entertain me here, right? SoFi, right? Let's say you own like 100 shares of SoFi, right? And you're like, you know what? They're just sitting here and, I've been making some fantastic gains on SoFi. Maybe I bought it around $15 or, we'll just say current market value for this educational example. And you're like, you know what? I want to lock in some gains. Well, normal retail investors, what they will do is they will go out there and sell their 100 shares for the current market value price, right? Nothing wrong with that. Give me an amen to comment if that's what you've done in the past, right? You bought low and you sold high, hopefully. But with that said, what we're going to do is go to our trade options section. Now, we want to get away from the buying side as quickly as possible and go to sell, okay? And then we're going to say sell a call. And then I'm going to select September 5th, which is 29 days. Actually, we'll go September 12th, 36 days. I know what I just went through, just kind of quickly, I'm going to explain it all, I promise you. What I'm saying here is I'm willing to sell my 100 shares of SoFi on September 12th for a price that I choose and collect a premium up front. Let me show you. Let's just assume that you own 100 shares of SoFi for an average cost basis of $21, right around the current market value. And if it hits, $23 on September 12th at close, if it's trading at 23 or above, you're okay selling your 100 shares. Okay. Well, if you did that trade, right, you would collect $98 of premium. Now, I like to toss everything into my covered call calculators. All my calculators and stuff here are free, guys. They're free inside of our Facebook group, so join us. That link will be in the description. So we're collecting $97 of premium. Our strike of option, that's what we're willing to sell our 100 shares for on September 12th, right? So I'm going to say 23, right? Because we said, hey, we're willing to sell them. Now, obviously, these premiums, guys, they always are changing, right? Like if I go back here, it's already at close to at 98. So results vary, not financial advice. This is going to look different when you're doing it, right? This is just what I'm seeing at the time of me recording this video. Strike of the option is what we're willing to sell it for. So we're selling it for $23. Our purchase strike price, we said right around market value. For simple math, we'll say you bought your shares for 100 shares for $21. And this is what our trade would look like. we get a 4.62% premium return, right? What does that mean? Well, that is just taking the premium of $97 and dividing it by $2,100, right? Because 21 times 100, right, is your average cost basis, right? And that gives us a 4.62% return, okay? Our profit on the shares, if we sell that, we'll cover it in a second, will be $200, right? Because you're selling them for $2,300, right? But you bought them for $2,100. Simple math. We got it, right? A total profit of $297. That's our profit on the shares plus our premium for a total return of 14% on this trade if we sell our shares. Let's talk about the risks because you got to understand them. Education is absolutely key. Without education, you're going to burn yourself. You're going to click something you shouldn't, okay? Let's talk about it, okay? Let's say the 12th rolls around, okay, and the market closes. And let's say SoFi's trading at, again, $21 or $22, anything under $23. Well, if that is the case, your contract would expire worthless, which isn't a bad thing. Basically, if your contract expires worthless, that means your shares, your 100 shares that you put up on the line, aren't going to get sold. Fantastic, right? And instead, they'll be returned back to you to run the play again for the following month for a strike that you're willing to sell them for, and you guessed it, collect more premium. This premium that you're collecting here is given to you up front. That is immediately given it into your brokerage account to do what you want with. Obviously, reinvesting it is probably not a bad idea, okay? But that is given to you up front. The second thing that can happen, and this is where this is the biggest risk of this strategy, what I'm showing you, is let's say on the 12th at market close, right, SoFi is trading at $25, $30, right? You are selling your shares at 23. You are seeing the full extent of your gains on this calculator, right? It's showing you your max profit is going to be your $200 gain that you get. Obviously, you collected that premium up front. So you are capping your upside. Is that a good thing? That's a bad thing? For me, it's a good thing. For you, you're going to have to figure it out for yourself. I don't treat options selling and premium collecting as a buy and hold strategy. I am very happy and sleep perfectly well at night knowing that I sold my shares at a profit. Now I get that money back. I get this $2,100 plus I have I get the $2,300, right? Plus the premium added in there as well to then go run the play on another opportunity. My sole focus with this is collecting premium. Okay, that is what that is my sole focus. And if you want like a kickstart guide to this, right, you can learn how you can build and launch your own premium collecting portfolio in literally a week. This doesn't take a long time. Click the first link in the description of today's video, and you're going to learn more about that. With that said, though, right, that's what that looks like. Now there is more advanced strategies to this, right? It's just like anything in life, right? High level, we all understand it. Taking it to the next level, right? There's a little bit more management. We can close out early and all that good stuff. But again, those are for other topics on the video. So go dive into the more of stuff on the channel. Okay, we got lots of stuff out here. So let's go back to our first scenario, right? Where we said, you know what? What if we want to buy 100 shares of a company? Oh, okay, let's go back. Right. So on SoFi, let's say, you know what, you're like, man, I love SoFi. I use it for my banking. It's fantastic. It's a great company. You know what? I'm going to buy 100 shares. Okay. Retail investor, AKA dumb money, right? They call us. Okay. We're going to go buy 100 shares and we buy them for $2,200. Okay. And we just sit there and we hope they appreciate. Cool. Right? Now, I'm not knocking buying and holding. I have a buy and hold portfolio of Vanguard funds, 5 Vanguard funds that I purchase every single Monday morning automatically, right? But buying and holding individual stocks, it's not for me anymore. Personally, I've just been burned too many times. So I focus on buying low, selling high, right? Using this strategy and then just having my buy and hold 401ks, all that high yield savings account separate. I treat this like a business if you can't tell, right? So with that said, let's say you want to buy SoFi as a smart premium collector, right? Premium chaser you are now if you've made it this far into this video. What we can do now is go to the trade options section. We're getting away from the buys, right? We're going to the sell. And now instead of selling a call, what we're going to sell is a put. And we're going to go out to that same expiration date. We'll go out to that September 12th. All I'm saying here now is the flip from what we just talked about. I'm saying I'm willing to buy 100 shares of SoFi on September 12th for a price that I choose and am given a premium up front for that. Let me show you, right? It's currently trading at like $21, right? Obviously, this is the live market. So let's just say $21 for the sake of this example. And let's say, right, SoFi is trading at $19, right? Or let's just say 20, right? So we're staying closer to the current market value like we did with the calls, right? So let's say if it drops to $20 and it's trading at $20 on September 12th, we're okay buying 100 shares. So if we say that, we would collect $52 of premium. Now you guessed it, I do have another cash secured put. I do have a cash secured put calculator. Again, free in our Facebook group. Go use this stuff, right? Here we're collecting $52 right here. Perfect. 52. We'll put it in. Our collateral now. This is important. Previously, like I showed you, our collateral was our 100 shares that we're putting on the line. Now now we're putting up our capital, right? Because your brokerage isn't going to say, oh yeah, Pete, you want to buy 100 shares at 20? Sure, go ahead, right? Collect your premium, right? No, they're not going to do that. They're going to make sure you have the money, okay? So you want to make sure you either have the margin, which I don't recommend if you're a beginner, but do what you want. This is that you got to go do your own financial due diligence. And then number two, right, is you need the cash, which is obviously the ideal situation, right? So 20 times 100 is $2,000. We're going to be locking up $2,000. Now we can see our premium is all over the place right now. So we're even at 61. So let's edit that because you could see we won't even edit it. We'll just say $52. And you could see this is our premium return this month. I like to put my expiration date here, 36 days. Okay, we're just there, 36 days. You could see our premium return is a 2.6%. Educational content only, not financial advice. Results valid only at the time of me recording. This is what the premiums look like. All I'm doing is taking the premium, dividing it by $2,000 in collateral, right? That gives me my 2.6%. I'm putting my expiration at 36, okay? Let's talk about the risks, okay? Let's say the 12th rolls around and SoFi is trading at, let's say, again, $22 and hasn't done much. It's just trading around $22. Your contracts expire worthless. Your money, your $2,000 that you locked up, right? Your $2,000 that you locked up here is returned back to you. Your brokerage isn't going to be holding that anymore. And you guessed it, let's go deploy that capital somewhere else, right? So we can collect more premium on a monthly basis. Fantastic, right? The second thing that can happen, this is the biggest risk that you need to be comfortable with because it happens, right? Is let's say that SoFi is trading at $15, $5 on September 12th at close. You are on the hook to buy your shares at $20. You got to be comfortable with that risk. That's why I always stress, and at least for me and my risk tolerance, I only do this on stocks I don't mind holding long term. Okay, I do this on ETFs. I do this on stable dividend paying stocks, dividend kings, dividend aristocrats. If you want to learn how you can build and launch your option selling portfolio in the next 7 days without compromising your work, your job, staring at charts all day, or drawing on candlesticks, click the first link in the description of today's video. You're going to learn what our Ark Options Strategy is, where we combine 5 premium sources into one simple strategy that really fits into real life. Again, click that first link in the description of today's video. Guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.